A very good day to all our viewers. Welcome to this special broadcast live here on Moneycontrol. I'm Stacy Pereira, and on this edition of Earning Express, I'm here to discuss a couple of key earnings from the pharma space that are expected today. As I'm talking about Dr. Reddy's laboratory as well as Cipla, which will be announcing its Q1 numbers today. So let me just take you through broad factors that the street is really penciling in for both of these companies. Let's go to Cipla first. Well, we could see their profits up about 836 crore rupees, which would be a relative upward increase of about 20% is what we are penciling in. If you look at the margin figure, we're likely to see a slight improvement there as well, coming in somewhere at 22.5% versus the 21.3% that was reported the quarter earlier. So that pretty much, that slight improvement is what we're expecting. Also likely to see a 14 to 15% growth in its US sales or the US markets, which is what is really keeping it upbeat. If I have to tell you, so far the US contribute, they've seen in quarter 4 at least the US markets have grown for 12 consecutive quarters on a year-on-year basis as well for the company. So Cipla really looking at that, but might see a subdued fare from the US market and really banking on its India market to be ramping up those sales. But we do have that cancer drug that's called Revlimid, which is a generic, which is actually going to propel this, not just for Cipla, but for a whole host of generic drug makers that are now selling this drug. What you also need to be looking out for is the commentary, the launch of their inhaler, the Advair generic, which is something that will be looked out for. Also, the commentary on the facilities in Indore and Goa and what observations have come there after those inspection by the US FDA. So that is something to be looking out for. That was Cipla. Now also let's turn our focus to Dr. Reddy's and see what we are likely to see there. There we're looking at a revenue growth of around 24% odd, coming in at 6,477 crore rupees. That's the number that could likely be up or down. Then we're looking at an EBITDA margin to be a little bit of a squeeze for even the profits for Dr. Reddy for that matter. Not really such a great number, but the US sales is what they're really banking on to offset those price pressures. So whether India can grow then in the double digits as it was estimated for their FY24 according to the company, we'll have to wait and see for when those numbers come and what the management really says, whether they can maintain those long-term guidance. EBITDA margins of about 25% is also something that the street will really be looking out for. So well, that was a snapshot of what we can give you of these two companies, but let's discuss how this is really going to come down, trickle in into the stock price, whether these earnings are something that will propel the stocks further. Let's get a sense of how the whole pharma sector is going to perform post their earnings. And to do that, joining me now is Purvi Shah, the Pharma Analyst at Kotak Securities. Thank you so much, Purvi, for giving us your time. We've kind of set the stage somewhat of at least what we could expect in terms of the numbers. Obviously, we'll be doing those number crunching a little further, but let's take up each of these stocks first and each of these companies and see what we're likely to see in their financials. For Dr. Reddy's, we are expecting better top line growth, but the other numbers could slightly miss estimates. What's your view? Let's take up Dr. Reddy's first.
Yes, thank you, Stacy, for having me. So on Dr. Reddy's, of course, generic Revlimid is a key thing that will come. So it is going to contribute significantly for this quarter. So because of which we are expecting that the numbers should be really good. We're expecting around 24% growth in top line with the sales number coming in closer to 6,100 crore. And profit number could be quite elevated compared to the first quarter of FY23. Barring this, I guess the other geographies, they are still struggling to, rake in good numbers. But what we look forward to is that raw material pricing, logistic costs, power and fuel costs, these have been very heavy in the first quarter of FY23. So they have cooled down a lot. So hopefully the margin expansion is something that will benefit across the sector for all the pharma companies because of these reasons.
Right. Also, give us a view on Cipla and how that pretty much is the opposite. We could say Cipla is really, not looking at their US operations doing so well for them. That will perhaps be the backbencher, and whether the India business is then going to take it up for Cipla.
Yes, so Cipla, we have a buy rating. It's one of our preferred pick. For the quarter, of course, we're expecting 14% growth in these sales and around 16 to 18% growth in their profits. So 800 crores is the pack that we're expecting for this quarter. What we really look forward to is that Cipla also has generic Revlimid, but it will be very small quantity for this quarter. As we know, they're facing issue at the Thampur site where the generic Advair has been filed. They have responded to it. So the FDA has to come back and give a clarity as to will they accept the remediation that the company has done. So there are two outcomes possibly. One is that if they are satisfied with the remediation and they go ahead and give an approval to generic Advair, then it's an immediate launch, which could be a really great thing for them. But in case if it is further delayed, of course, the company has very rightly clearly mentioned it in their last quarter earnings call that they're also looking at filing it from the other plant now. So it might get delayed, which is already factored into the current estimates. What we really now look forward is to this commentary. How do things shape around generic Advair approval and the response from the FDA?
Right. So a lot will be banking on that, at least for Cipla, whether the generic Advair is really something that the management will have to clarify on. But let me bring into the broader picture here. Now, one of the bigger concerns from pharma companies has been that impact of that national list of essential medicines, or NLEM. A couple of them being, removed from there, a couple of them decreasing the prices because of that. How much is that really going to have an impact on these pharma companies?
So Stacy, if you have to see, the list keeps on revising with new additions coming in. So we're not witnessing too much of an impact of it on our coverage. What we also feel is that, in fact, this first quarter will have a minimal benefit of the price hikes that all the companies could take on their domestic portfolio, which was around 12% of as that was the WPI for last year. So that's the price increase that the companies can take. So this benefit we'll see reflecting in Q2 numbers more. So as of now, NLEM, we don't see much of an impact on our coverage.
Right. So NLEM really going to come into play, at least from the quarters following this, not so much in this one. But what about the delayed monsoon and, the acute businesses for these drug makers? Is that going to slow down with the delayed monsoon, and how is that going to really play out? Will that change much for the domestic growth at least?
So yes, June usually is when the monsoon really sets in, and we've seen that at least in couple of regions it's not set in, but it was a delayed onset, but the season has been picking up well. So we'll see those numbers coming, that July and August numbers to be much better compared to June. So I guess to a certain extent there could be a little bit of an impact on the acute portfolio, but we're not expecting it to be a big dent.
Right. Purvi, also take us through a little bit of what we can expect in terms of new launches. That has been something that has really kept up these stocks, at least for Dr. Reddy's. That was something that has been a buzz, even the different geographies that they are expanding in. How much will it really, show right now, and what can we expect from these major players and their approach?
So say honestly, when it comes to launches and increasing the existing basket in itself, whenever the companies have an issue at their facility with the FDA, they are struggling to get the newer approvals. But apart from these, the products that are already launched, they're gaining market shares. This is also helping them to certain extent to mitigate the pricing pressure. As we've said that, Cipla and Sun happen to be our preferred pick, and Sun has a very good portfolio when it comes to specialty chemicals, specialty pharmaceuticals, sorry. So these products also are doing quite well for them. So When it comes to USPs, at the moment, we feel that most of the companies are able to, mitigate the pricing pressure, and they're sailing through quite well.
Right. So we've heard of a couple of tailwinds, raw material prices that have now eased out and all. What are the possible headwinds that could come other than, of course, the US FDA and those, inspections that are thrown at them? What are the other, broader macro headwinds that pharma companies could face?
So at the moment, like we mentioned, apart from the FDA inspection, there is nothing much that is, get to be worry of right now. So we feel that coming quarter also like whatever commentary we've heard for the past 2 days from the numbers that have been coming out from the pharma companies, they're very comfortable with the current scenario, and expect that the margins are sustainable, whatever number has been reported in quarter one. So I don't feel there's much of a headwind at the moment.
Right. Let's also look at the stocks and how they have performed so far. If I have to look at Cipla, well, it's down in a little bit of pressure today ahead of its earnings. But on a Y-to-day basis, it is up on a year. If you look at on a 1 year horizon, it is up about 10%. If I have to look at Dr. Reddy's too, that one also up for on a yearly basis, up almost 30%. So how are these stocks really rallying, and are we going to see this, sustain and carry forward as well?
So supply, yes, around 900, 950 levels is when they received that Pithampur observations. So that's where the stock corrected, and because there was a little bit unclarity as to how the generic adware will be launched or the delay. So you've seen that correction coming because of that. Like I've already said, it continues to remain our top pick, and we have a buy rating with a fair value of 1,100. And we feel that today's earnings as well as management commentary will set a tone for it going forward. As far as Dr. Reddy's is concerned, we have a reduced rating, and we feel that the story that they have, the US business and the domestic piece coming in and the margin expansion, that is all priced in at the current levels. So we feel that there could be some pressure on the stock in the near term as well.
Right. But what about the whole pharma sector as a whole? Do you see that one propping up ahead? That has been one of, it's been swinging, we could say, or oscillating really, but positive as a whole, if you have to look at it from a longer perspective. So what is the take, or how should one be really looking at the Nifty Pharma Index, or also the pharma in the broader sense?
Yes, yes. So on the sector, we have a neutral view at the moment. We still see, because if we see in the past couple of months, the run-ups have been quite sharp. There's limited upside that we see for most of the stocks from here. Now, what we are looking forward to is that what is a commentary that comes from the management in terms of outlook for FY25 and beyond also. At the moment, we feel that the sector can do well because of the raw material prices, freight costs, and the power and fuel costs cooling down to a greater extent. So, and there are of course certain big launches that are there for certain companies which are planned. So we feel that there is a delta that would come in, and the EBITDA margin and profitability are also expected to be improving. So at least for near term, we're not seeing any larger headwinds that is going to derail the growth of the sector.
Right. What about exports? Because a big part of their earnings, or at least for pharma companies here back home, is that export factor. So where could that really stand? And are we likely to see double-digit growth when it comes to that for any of these companies?
I would say that, see, if you exclude generic Revlimid, I guess most of the companies will be having a growth of high single digits or lower double digit in a very few cases. But barring that, I guess we feel that the interesting piece is going to be the domestic business pharma. So I guess companies which have a larger piece on domestic front will be able to garner much better growth compared to the exports. Aurobindo, of course, will be a different player because they have a lot of approvals they have in the US that has come in. Right. So that could be a different story there.
Right. And well, since we're talking about pharma, let's also get a sense of, how the healthcare services sector as well as hospital and diagnostics, how will they perform? Yes, this is, kind of taking a round overview, one would say, but what are we anticipating for these companies also?
So for the first quarter, when it comes to hospitals, we've been very bullish on this hospital segment. We have an attractive rating for the sector. And we believe for the first quarter, the volumes, you may not see too much of a growth, but ARPOB, that's average revenue per occupied bed, that's where the growth has come in. And we'll see that most of the companies will deliver a better number. When it comes to diagnostics, of course, diagnostics, non-COVID volumes, we're seeing sequential pickup. But when it comes to pricing, a relief that is there right now is that for the last 2 years, we've seen significant pricing pressure for the major players like Dr. Lal and Metropolis, which is now getting cooled off to a certain extent, but it still continues to be there. The other factor that weighs on is that investments in newer technologies and marketing to, bring up the volumes. So we feel diagnostic is something where we have a cautious rating and we have a sell and a reduce on both Dr. Lal and Metropolis.
Right. Well, thanks so much there, Purvi Shah, Pharma Analyst from Kotak Securities, joining us, giving us an all-round perspective of what we can expect from the Indian pharma companies ahead of their earnings. And for all our viewers who've tuned in, I hope this was useful and gives you, some perspective of what we can expect from Dr. Reddy's labs as well as Cipla, which will be bringing out their Q1 results later this evening. But for everyone watching, thanks so much for tuning in.